Hey everyone, it is Julie here with TipRanks, and today we're taking a look at 3 top analyst strong buy stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 stocks that all have recent buy ratings from some top ranked analysts. On top of that, they come in with a unanimous strong buy consensus overall. So we're going to take a look at these companies, what it is that they do, and what those analysts are predicting for the stock's future. We found today's stocks over on the TipRanks top analyst stocks page. Found right under the Ideas tab, this page will show you all the stocks that have been picking up ratings from some top-ranked analysts. We narrowed it down to strong buy with a medium to large market cap and decided to focus in on the industrial sector. This narrowed our list to just 9 stocks below. Keep in mind you can also scroll the bottom here and see what sectors are picking up the most buy ratings too. And just before we get into today's stocks, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's get right into our top analyst industrial goods stocks. First on the list is a company that we've touched on before, that is Dycom. They trade under the ticker DY, currently priced at $170 per share. Now, we last talked about them around the start of April here. In the last 6 months, the stock has gained about 34.5% and is up 69% in the past year, but cooling off a bit lately, down over 5% in the last 3 months, dropping off here after the 19th. They do currently score a 10 out of 10 on the TipRanks Smart Score. Dycom Industries provides specialty contracting services. They work as a contract workforce provider in the telecom industry. They have more than 15,000 workers on their payroll, available for jobs in everything from wireless construction to planning to maintenance and engineering. A series of specialized services to meet the essential needs of its telecom client companies. They operate through a chain of several dozen subsidiaries with over 580 locations across 50 states. As you saw on the chart, the Dycom stock has cooled off, particularly in late August there following their latest earnings report. Despite posting an earnings beat, the company's Q3 guidance came in a bit lower than anticipated. For their second quarter, they reported earnings per share of $2.46, beating estimates by 20 cents per share. And revenue of $1.2 billion was in line with expectations. They also saw a 15.5% increase to those contract revenues. Looking forward for the third quarter, they're anticipating the total contract revenues to increase mid to high single digits. Dycom also announced a new acquisition, as they're set to acquire Black & Veatch's public carrier wireless telecommunications infrastructure business. Now, the terms of the deal were not disclosed, but for 2026, it's expected to contribute $250 to $275 million of contract revenues. In just the past week, we've had several Wall Street analysts reiterate their buy ratings on the stock, and a couple also increasing their price target, including one 5-star analyst from B. Riley. They noted the company's Q2 results that were ahead of the estimates, including the re-acceleration of organic growth revenue, along with the acquisition of Black & Veatch's public carrier infrastructure business. The firm's thesis of an inflection towards positive organic growth and EBITDA expansion is playing out, and they see this continuing into the second half of the calendar year and beyond. Also increasing their price target was an analyst at KeyBank. They noted the below expectations Q3 guide dominating the narrative, but noted that the company reported an inline quarter, announced an attractive acquisition, and highlighted AI-related spending on fiber expansion. Dycom's unanimous strong buy rating is based on 7 current analysts, and their average price target comes in at $205, implying an upside potential of 20% from current prices. And on the right here, you can see we have a tightly grouped range of price targets. On the low end, we do have a couple at $200 for an upside of 17.5%, and our high-end price target is $210 for an upside of over 23%. Second on the list today is Aspen Aerogels. They trade under the ticker ASPN, currently priced at $28 per share. They've jumped 80% year-to-date in the last 3 months, are down just a few percent, and they currently score a 10 out of 10 on the TipRanks Smart Score. Aspen Aerogels uses aerogel science to produce quality insulation materials. For more than 20 years, they help energy infrastructure companies design and operate more efficient, safe, and profitable facilities. Their advanced insulation products now help to promote the adoption of electric vehicles, enhance energy efficiency, and support the availability of cleaner fuels in traditional energy markets. They focus on energy industrial, battery materials, and battery thermal barriers. They shared their second quarter earnings report back on August 7th, where they came out with an earnings beat and also record quarterly revenue. They reported Q2 earnings per share of 21 cents, beating estimates by 16 cents per share and making it one of their first profitable quarters. On the side of revenue, they came in at $117.8 million. That was up 25% quarter over quarter and 145% year over year. It beat estimates by $17 million. With this quarter, they also increased their 2024 revenue and profitability outlook for the second consecutive quarter. An analyst at Barclays just initiated coverage of the Aspen Aerogel stock, rating it a buy. They said that Aspen is a unique story that has quickly transformed from a traditional oil and gas as a customer to energy transition markets through its innovative aerogel products that prevent thermal runaway in lithium batteries in EVs. The firm expects significant growth, especially after construction of Plant 2 by mid-2026. Aspen Aerogels has 10 current analyst ratings, coming in as a unanimous strong buy. And the average price target comes in at $34 per share for an upside potential of nearly 20%. Looking at those ratings down below, our low end actually does come from Barclays with a downside of 5%. The stock has already surpassed their price target of $27, while our high end price target comes from TD Cowen here at $41 for an upside of 44%. If you've made it to our third stock today, then this is a reminder to make sure you hit that thumbs up button. Third on our list is another company we've covered before, that is Atmus Filtration Technologies. They trade under the ticker ATMU, currently priced at $33.75. Their stock has gained 51% over the past year. We've touched on them a bit more recently, covering them here around the start of June. In the last 3 months, they've gained over 13% and currently score a 9 out of 10 on the TipRanks Smart Score. Atmus Filtration is an industrial firm offering differentiated filtration solutions. They offer a full line of filter and filtration products to a variety of industries, including customers in the fields of agricultural, power generation, rail, marine and truck transport, mining, oil and gas, and more. The company is a leader in filtration technology and protects its product portfolio and IP with more than 1,250 patents. They shared their second quarter results near the start of August, and it was eventful as the company came out with an earnings and revenue beat, an increase to their full year guidance, and also declared their first quarterly dividend. Their Q2 earnings per share came in at 71 cents, beating expectations by 14 cents per share, and revenue came in at $433 million, beating estimates by over $14 million. Looking forward, the company updated their guidance for revenue, adjusted EBITDA margin, and their adjusted earnings per share, plus announced their first quarterly cash dividend of 5 cents per share and authorized a $150 million share repurchase program. And of course, that quarterly report did spur some attention from Wall Street, including one price target increase from a 5-star analyst at Baird. The firm said that share gains and continued strong execution delivered a sales and margin beat in the second quarter. They see their outperformance amid tenuous end markets as a strong statement and positive for proving an early track record as a public company. And that makes me realize I forgot to mention that Atmus Filtration did spin off from diesel company Cummins back in 2023. And the stock now currently has 5 analyst ratings, all coming in with a buy. The average price target comes in at $37 per share for an upside of 9.6%. Looking at those ratings down below, our low-end price target is $36 for an upside of 6.6%, while our high-end price target comes from an analyst at JP Morgan at $39 for an upside of 15.5%. So that is a quick look at 3 unanimous strong buy stocks in the industrial sector, all with recent ratings from some top analysts. Let me know your thoughts on these companies in the comments down below, if they were on your radar or not before. I always love hearing from you guys. Of course, keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you always do your own due diligence and research. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.